Yes. What's going on, guys? Day Traded Addict here. And today we are going to just go over a couple of strategies that's going to help you, avoid getting stopped out a lot. Because I know a lot of new traders, they struggle with that, okay? And today we are going to cover that. So let's go. Now, we're going to go over 11 different strategies you guys can use, okay, when it comes to, dealing with your stop loss. So let's go to the first one here. The first one is basically putting your stop loss to break even. Okay, we're going to use a simple break even strategy that will allow you to not, get stopped out a lot. So let me show you guys a good example. Right here, we have nice support right here. The market is bouncing, okay, right here. So we see clear support right here. So we see this nice bullish bar. We want to go long. So we go long, okay? Now, we put our stop loss below that bar, and then we look for, okay, a quick profit. Now, let's say that your profit is going to be this high, okay? So you want to target this high right here. Now, notice how the market went up, but it didn't go to the high, okay? And then it went right back down and stopped you out. So your stop loss is right here. For you guys don't know, let me actually move this over. So your stop loss is right here. Now, you see this red bar, it stopped you out. Now you're pissed off, you're mad, you're calling up your mother, you're calling up your father. Oh my gosh, you took my money, I don't know what to do, right? But if you had a simple break-even strategy, so if you look at this, all right, let's go down to here all the way to 1-to-1, okay? Because that's the strategy. So notice how the market went up 1-to-1. That simply means that whatever you're risking, it went up that same amount. So let's say you're risking 10 ticks or 10 pips. The market actually went up 10 pips. Now, since it went up 10 pips, what I like to do, if I'm risking 10 pips, right, and it went up 10 pips, that means I'm going to put my stop loss to break even. So I entered right here. So I'm going to move my stop loss up where I entered. So if the market does decide to pull back on me, I won't get stopped out. I just get stopped out for break even and boom, I'm done. So that's one way you can actually avoid getting stopped out, because I see a lot of new traders, they don't do this. So that's one way you can, avoid the market, coming for your stop loss. So let's go to number two. Number two, re-enter the market after getting stopped out. Okay, so if you get stopped out, a lot of times most new traders will complain about it and say, oh my gosh, I got stopped out, I don't know what to do, what's going on. Okay, guys, sometimes you might have to try more than once. So if you get stopped out, and notice how we got stopped out, it didn't go nowhere. Okay, price didn't go nowhere, it just went down real quick and then shot right back up. So that's telling you that the market probably don't want to go down. Okay, it's just going down for some quick stops, and then we're going back up. So what you can do is you can re-enter. Now, this is not a strategy that will help you avoid getting stopped out, but it is a strategy that will help you get back your money if you get stopped out, okay? So let's say that you see this bar right here, the market didn't go back down. Well, guess what? You can re-enter. So you can enter right here, guys, all right? So I see this nice bullish bar right here. I'm getting in the market, okay? Put my stop loss right here, and boom, you got your money back, okay? That's the beauty of going in the market and trading what you see, okay? Don't complain about getting stopped out. If you have another opportunity, take that opportunity. Now let's go to number three. Number three is using a wide stop. Now, I don't use wide stops, but sometimes using wide stops can actually help you not get stopped out. So this good example right here, okay, we have a nice little breakout, okay? So we are looking at this market right here. And let's say that we got in right here and we put our stop loss below that bar right here, okay? We got stopped out, right? But let's say that you had a wide stop. So let's say we bring down our stop to the next swing low, which is right here. So we have that stop loss right here, and then we could go for that quick 1-to-1, which is right here. And notice how it went for that 1-to-1. But now, problem is with wide stops is sometimes you want to go for more than 1-to-1, okay? And a lot of times, if you use a wide stop, it's very hard to actually, let me show you real quick. It's very hard sometimes to actually go for a big target, like for a 4-to-1, because the market sometimes doesn't move, okay, all the way up like that. If you're trying to go for a 4-to-1, a lot of times the market doesn't go that far. So just understand if you use wide stops, be careful trying to go for a 3-to-1 or a 4-to-1 because sometimes the market won't go that far, right? Number 4, backtest. Okay, that's another good way to help you not get stopped out a lot, okay? Because what you can do is you can look over your trades or you can back test the market and try to figure out different strategies that will help you not get stopped out. A lot of times, okay, if you just look at your trades or just back test the market will reveal to you how to enter the market so you won't get stopped out a lot. So keep that in mind, guys. Always practice, always back test, and always go over your trades because that will help you and give you a lot of answers when it comes to where to put your stop loss at, okay? Now, number 5, scaling out. So what that simply means is you're gonna have different targets. So let's say that you got in the market right here. We have a area right here that you can tell that the market is holding right here. So it came back to this nice support area right here. Now, we have this nice bullish bar. You wanna go long, okay? So what we do is we go long, and now we are looking for profits. So let's say that, okay, you want to look for a nice 3-to-1. Now, a lot of times the market doesn't just go straight up to that 3-to-1, okay? So what you can do is you can have targets. So you can have a target at 1-to-1. So let's say that this is 1-to-1 right here, okay? So this is a 1-to-1 right here. And then we're gonna have another target at 2-to-1, okay? Right here. And then we're gonna have the last target at 3-to-1, which is right here. Now, the reason why this is good is because if the market goes to that 1-to-1 target, you could take some profits off, okay? So if it does come back to you break even, at least you have some profits now, right? Now, let's say if it goes to the second target, so we could pull our stop loss all the way back to break even where we entered. Now we have 2 targets, so that means even more money, okay? Now, sometimes it will go all the way to the third target, which is the 3-to-1. So having a system or a strategy that allows you to scale out, you can actually take profits along the way. And if it does come back to your entry point, you can just get out, and plus you can have profits. So that's another way to deal with not getting stopped out. Now, the 6th strategy you can use, okay, is wait for someone to get stopped out first. Okay, so now we have the same, example that we was dealing with earlier, right? So somebody went long right here, okay, and they got stopped out. So what you can do is you can say, you know what, I don't want to be that first person to go long. I want to wait for someone to get stopped out first, and then I'll go long because, if they got stopped out and the market shoots back up, it's a strong possibility the market will continue to go back up, all right? So instead of entering right here, you're going to wait for this person right here to get stopped out, and then you enter right here, and then you look for your profits. Now, this way is a good way to enter the market, but you will have less opportunities during the day because this doesn't happen a lot. So you're not going to have a lot of opportunities during the day, with this strategy. But at least you can say, you know what, this is a high quality trade because now someone got stopped out. I don't have to be that person to get stopped out. Let me get in and let me look for my profits. So that's another good way to avoid, getting stopped out. All right, so let's talk about number 7. Number 7 is using no stop loss at all. Now, I do not recommend anyone that's watching this to use no stop loss at all. There are some traders that's out here that use no stop loss, and pretty much what they do is they will just gauge the market. So let's say that, okay, they decide to enter right here, right? And if the market goes here, they will see if the market is going to continue to go down. Now, let's say that the market does continue to go down. Let's say the market does something like this, right? Pause a little bit and continue to go down. They might say, all right, let me cut this trade off. But, to me, that's a very dangerous way to trade because there's going to be one trade where you are very stubborn and you're not going to get out. And then the market is going to continue to go down, and then it's going to continue to go down. And then you're going to say, man, I'm losing a lot of money and I don't want to get out because if I get out, I'll take a big hit. And next thing you know, the market's going to continue to go down and you might lose your whole account. So to me, that's a very dangerous strategy. A lot of people do not have the discipline to just get out right away. So it's best to have a hard stop. So I'm just letting you guys know. But this is a strategy some people use, right? Number 8, don't trade at all. I don't want you guys to force trades. If you don't see nothing on your chart, okay, that is good enough to say, you know what, I want to risk my money on that trade. If you don't see that, guys, you don't have to trade for that day. Some days I don't trade at all. Okay. So I want you guys to understand, if you come in the market today and you don't see a good setup, don't trade. Skip that day, go outside and just, wait for it tomorrow. All right. That's a good way to not get stopped out, because if you force a trade, I can guarantee you 9 out of 10 times you're going to get stopped out. Right. Number 9, buying that resistance and selling that support. So let me show you guys real quick. So right here, guys, we have support. Okay. We have resistance right here and also right here. So a lot of new traders will say, oh, you see this market is selling off, I need to get in. And what they would do is they would sell right at support. And they wonder why they're getting stopped out. Why are you selling right at support? Support means that there's a possibility, actually a strong possibility, buyers might come in. Okay. Now, again, the same with buying at resistance. You see this big buying right here, guys? Oh my gosh. New traders will go crazy if they see that. I got to get in. I have to get in, because if I don't, the market is going to leave me. Okay. And they get in right at resistance. And guess what? Boom. Get stopped out. So selling that support and buying that resistance, guys, stop doing that. And that alone will help you, right? You can avoid getting stopped out if you know not to sell that support and buy at resistance. Okay. Number 10, wait for a clear market. Okay. It's very simple. You want to wait for a clear market, because if you don't, then guess what? You're going to force a trade and then you're going to get stopped out, right? Now, what's the difference between waiting for a clear market and don't trade at all? Well, don't trade at all is basically you're skipping that day. Waiting for a clear market is you're actually going to trade that day, but you're waiting for a market that's showing you, hey, it's very clear that I'm trending up or I'm trending down or whatever you're looking for. It's clear. It's clear to you. Okay, so let's say that you're looking at 3 markets, right? One market is very choppy. The next market, it looks like it's doing nothing. But the third market is very clear. All right, we're making higher highs. It's resting that support. You see that double bottom, boom, you want to buy. It's clear to you. That's what I'm talking about. Okay, only trade when the market is clear, because if you don't, guess what? I can guarantee you, you're probably going to get stopped out, right? So that's another way to help you guys when it comes to, getting stopped out. And let's go to the last one, guys. Number 11, be flexible with your targets. So what do I mean? So let me show you guys a good example. Okay, so you see the market right here. We have this nice trend line. We're bouncing off some type of support. Okay, and basically, let's say that we want to get in right here. Okay, now, just to let you guys know that this strategy is more advanced. Okay, so I don't expect a new trader to do this right away. Okay, I actually explained this type of strategy in my course, and I explained to my students that this is more advanced, so you don't have to do it now, but probably later on in your career, you probably want to do something like this. So let's say that you got in right here, okay? And basically, you're looking for, let's say we're looking for a nice 3-to-1. And let's say that would be around here. So we're looking for a 3-to-1. We're in the market right here, and we see that the market made a new high, but it's struggling, okay? Look at this bar real quick. Let me zoom in so you guys can see. Look at this bar, okay? This bar right here. A nice pin bar that's basically looking very bearish. Okay, so we broke the high. It can't go up that much. And now we have a bearish pin bar looking at us. And that could mean that sellers might come in. So by seeing that, you can say, you know what? I don't think I like this trade anymore. What I'm going to do is probably take 80% of my profits right now. And if it comes back to me break even, I just get out. Okay, so you can put your stop loss at break even. Take maybe 80% of your profit if it goes below this red pin bar right here. And then if it comes to your break even, you out. So this is just being flexible. It's not black and white. A lot of traders, when they trade, it's black and white. So they have their entry, they have their exit, and they just sit back and wait. This is more, you're actually being more active when you're trading. And you're looking for signs that, maybe this trade is looking kind of suspect. You know what? I think I want to get out. or I think I want to take, half off or 80% off. And then if it comes back, whatever. Okay. So again, this is a little bit more advanced, but this is another good way to help you when it comes to, not getting stopped out. So guys, that's all I have for you. Now, if you enjoyed this video, guys, make sure you hit that like button. Make sure you hit that subscribe button. And please join my free Telegram group where I post motivational videos and also exclusive discounts for my trading program. And if you don't have my trading program by now, guys, please check that out. Do not go to social media or any type of platform that I'm on and type up my name, because there's a lot of fake pages out here. So go below in the description and make sure you go to those links, because those are the correct links to go to, all right? Check that out if you want to take your trading to the next level. Also, if you have any questions, guys, comment below, because I always try to answer all your guys' questions. Thanks a lot for your time, and please have a great day.